Due to the creation of a new international energy order between China and the Middle East, this magnificent bargain may be remembered as having started to fall apart. U.S. President Franklin Delano Roosevelt met with Saudi King Abdul Aziz ibn Saud on the USS Quincy on February 14, 1945. It marked the start of one of the most important geopolitical alliances in the previous 70 years, one in which American security in the Middle East was traded for oil with a fixed price in dollars. But times have evolved. The birth of the petroyuan was commemorated by President Xi Jinping's meeting with the rulers of Saudi Arabia and the Gulf Cooperation Council. This conference marked a key turning point for the petroyuan, even though China has been buying more oil and liquefied natural gas in its own currency from Iran, Venezuela, Russia, and some regions of Africa for some time. China, as part of a bigger effort to de-dollarize the so-called BRIC nations of Brazil, Russia, India, and China, intends to rewrite the rules of the global energy market, according to Credit Suisse analyst Zoltan Pshar. After the weaponization of dollar foreign exchange reserves in the wake of Russia's invasion of Ukraine, this also encompasses a large number of other parts of the world. What does this actually mean? The trading of oil will initially take place much more frequently in renminbi. In addition to significantly increasing its imports from the GCC, Xi Jinping promised that China will work toward all-dimensional energy cooperation during the next 3 to 5 years. This might involve joint exploration and production in regions such as the South China Sea, as well as financial investments in plastics, chemicals, and refineries. Beijing anticipates that all of it will be paid for on the Shanghai Petroleum and Natural Gas Exchange in yuan by 2025. A substantial shift in the world's energy economy would result from this. Pshar claims that 40% of the world's proven oil reserves are held by Russia, Iran, and Venezuela, all of which are offering their crude to China at a significant discount. GCC countries control an additional 40% of proven reserves. The remaining 20% are spread across Indonesia, North and West Africa, and other regions governed by China and Russia. Although the renminbi does not take the position of the dollar as the world's reserve currency, the petroyuan trade has significant economic and financial implications for investors and policymakers. According to Xi Jinping, his visit will usher in a new era in China's relations with the Arab world, with Arab states of the Gulf, and with Saudi Arabia, according to an opinion piece published by Saudi media. The visit started a new historical period in Saudi-Chinese relations, according to Mohammed bin Salman, the Crown Prince of Saudi Arabia. Xi Jinping was welcomed warmly and generously by the Arab world, in stark contrast to US President Joe Biden, who visited in August. After labeling Saudi Arabia a pariah during his presidential campaign, Biden received a cool response. Biden did not travel to Riyadh, the Saudi capital, but rather to Jeddah. He was welcomed by a subordinate officer upon arrival. Just a few weeks after his visit, which was meant to persuade Saudi Arabia to increase oil output and so lower energy costs, the Saudis took the exact opposite action. Instead, they made plans to reduce OPEC Plus's oil production. With Xi Jinping's visit and the first-ever leaders-level China-Arab League summit, China's involvement in the region is entering a new chapter that better serves China's significant interests. China's reliance on the Middle East for energy is growing. The nation is a big consumer of Saudi crude oil and the leading importer of oil from the Middle East worldwide. China buys over half of its total oil needs from the Middle East. With investments in ports and other infrastructure, China is another big foreign investor in the region, helping Beijing's trade routes to Africa and Europe. 21 Arab countries are currently involved in China's Belt and Road Initiative. The second and third most preferred locations for Chinese construction projects under the BRI, respectively, are the United Arab Emirates and Saudi Arabia. China is funding infrastructure and energy projects in Iraq in addition to aiding in the reconstruction of Syria. It is helping to build the new metro in Mecca and the new administrative center in Cairo. China has also come to understand the importance of the Middle East as a diplomatic ally. Additionally, the potential for inexpensive energy is already tempting Western industrial companies to move their operations to China. Take the recent decision by BASF to downsize the size of its main facility in Ludwigshafen and move chemical operations to Zhanjiang. This could be the beginning of the farm-to-table movement that Pshar refers to, in which China tries to increase its local production of value-added goods by utilizing cheap energy. Because of the drop in energy prices, several European companies have increased their operations in the United States. Petropolitics presents both opportunities and risks in terms of money. It is important to remember that numerous emerging market debt crises were caused by the recycling of petrodollars by oil-rich countries into developing markets like Mexico, Brazil, Argentina, Zaire, Turkey, and other countries via U.S. commercial banks starting in the late 1970s. Petrodollar spurred the emergence of a more speculative, debt-fueled economy in the United States because banks flush with cash introduced a bevy of new financial innovations, and an influx of foreign currency permitted the nation to run a larger deficit. This trend might now start to change. Less foreigners are currently purchasing U.S. treasuries. The de-dollarization process will be fueled if the petroyuan takes off. China's control over expanding energy resources and the products they produce could be a significant new factor driving inflation in the West. Although it is a slow-burning issue, it might not be as slow as some market participants think. With the urgent goal of obtaining the largest oil and gas reserves in order to fuel its economic progress, the Middle East continues to be at the top of China's energy agenda. Within the next 10 years, China hopes to surpass the United States in terms of GDP, becoming the world's top economic power and, consequently, the world's top superpower. Because of this, China must not only acquire the largest possible reserves of oil and gas in the Middle East, which continues to be the largest global stockpile of these resources, but also do so at the expense of the US, turning it into a zero-sum game that benefits neither nation. For many years, the United States has followed this model of exponential economic growth driven by oil from the Middle East. Therefore, it makes sense for China to follow suit and capitalize on the West's initial hesitation over the impact of carbon emissions on climate change. China's sphere of influence has been able to take advantage of two significant advantages as a result of the West's unwillingness to invest in oil and gas and failure to build the infrastructure bridge needed to replace these high carbon emissions products with green energy, most notably the failure to invest in nuclear power. First, China has continued to power its growth with whatever fuel it chooses, typically at a considerably lower cost than the green options used in the West. Second, crucial strategic components of the West, most notably the European Union, have been compromised by its inability to construct the bridge to green energy's transitional infrastructure. Saudi Arabia is not just one of the strongest backers of the China-GCC Free Trade Agreement, which has as one of its main objectives the establishment of deeper strategic cooperation in a region where U.S. dominance is showing signs of retreat. The kingdom is a strong proponent of ending the dominance of U.S. dollars in the world's oil and gas markets. Although a closer connection with China offers some flexibility and influence, it is obvious that it won't soon succeed the U.S. as the Gulf's primary security partner. Following the meeting, Saudi Arabia's foreign minister, Prince Faisal bin Farhan Al Saud, said that his country would like to keep close ties with both the U.S. and China. We don't regard it as a zero-sum game by any means. Up until recently, China avoided interfering in regional conflicts and took a back seat to the major security issues facing the Middle East, from the Syrian civil war to Iran's pursuit of nuclear weapons and Arab-Israeli peace. This position is unlikely to change because China prefers to imitate Russia in these situations. What are your thoughts on China and Middle East, and do you think they can collapse the U.S. economy? Let me know down below. If you want to continue to learn about business investing and financial education, we have got this video waiting on the screen for you to check out. Don't forget to give this video a like and subscribe for more videos like this. Thank you so much for watching, and I'll see you in the next one.